Hey folks, this is the All Access Spy Report. Things look a little bit messy in this picture, don't they? Lines everywhere, whatever. But let's try to clean up what it is that we're seeing. We've got this sort of formation that is pulling together. I suspect that the beginning of the month numbers might be what we're waiting here for to pick a direction. But like I said to someone yesterday in the trading room, when we decide ahead of time inside of this formation that we're going to go either long or short, what we're actually doing is rolling dice on the idea that we know which direction this formation is going to resolve. Now, I really am not in the business of rolling dice. I would like to say that nothing about trading does not involve a gamble, but in the end, there really is. Once you take a trade, it's never absolutely the right trade. There's always a chance you're going to be wrong. And so if chance is involved there is that gambling element. But I am not going to take a trade unless I'm rolling with loaded dice. Sorry, that's just my game, okay? So the way we look for the loaded dice is to simply wait to see which way the chart is going to lean. Now, that's going to mean I have to give up the idea that I'm going to catch a bottom or a top, which is okay for me. I'm over that. Used to be a really big thing for me, but I'm not so focused on it now that it's the thing that I look for. Those times are past. So when we take a look at something and we say, all right, what's this doing? Definitively, if this is the correct formation, what we are going to do is have to lose the monthly VWAP before the chart tells me that I have downside momentum. All right? Now that gives me a lot of room. I can trade in between these levels. For instance, if I lose 165.78, I can trade into 165.18. Very easy, right? But that's level to level trading. My decision to short here is not my commitment to the fact it's going to roll to 160. It's not it at all. It is my commitment to the fact that it's going to roll to 165.18. And if it loses that area, it should get to 164.50. That's how you need to trade these formations if you're going to trade inside of this mess. Same space for the upside. Got to get up above congestion. You can start at 166.06. Take an aggressive long, but you could have trouble at 166.34, 166.30. If you don't, you'll have 166.64. The better trade, if you don't want to be caught in all of this noise, is to simply wait for the breach of 166.64, knowing that if this is the proper formation, you're probably going to go up into 167.11. All right? And then if it holds, you can stair step up your pivot points. It's as simple as that. But taking a trade here and saying I'm sitting in this until it resolves to the upside, if it breaks down, excuse me, well, you heard that sneeze. Sorry about that. In any case, if you get up above that region and get into this space, you're perfectly fine. But if you start collapsing, then where do you stop? See, you've exposed yourself to all the risk that you didn't need to because you should have just waited until the scales tipped, right? Figure out which way the scales are tipped and then get on that side. That's exactly how that works. So, that's it for the event. Good Good luck trading today. Notice range of motion, wide, not so wide, not so wide, right? Very, very tight trading motions getting changed around, but still very, very choppy. Okay? So if we sit down in this choppy zone, we have to realize that we should trade level to level. Realize that if we come into the baseline here, it's very likely that we bounce if we're holding the pattern. If we break the pattern, then we're off to the races. All right? Good luck trading today.